It's another year, and as a Tesla financial backer, you might be worried about what the year will resemble for Tesla stock and essentially some other stock on the diagram. Taking into account that the securities exchange is profoundly unpredictable, it's generally expected to be questionable what's in store for a stock like Tesla anyway. American venture firm Morgan Stanley gives a sneak peek into what the future might hold for the vehicle organization, and as per the firm, this might be the extended time of chance for Tesla financial backers. You would rather not pass up this, so remember to watch until the end to get every one of the subtleties. Greetings, folks, and welcome back to Tesla Tomorrow. Tesla's stock cost as of late went up out of this world, and bout came after the stock plunged 30.8% and made a 7-day-long string of failures, which made a profoundly oversold condition, making the stock close at its lowest cost since August 2020. In spite of that, Tesla shares actually plunged 38.8% in December, putting the automaker on target to experience the greatest month-to-month drop since I'd opened up to the world in 2010. Anyway, Morgan Stanley examination actually accepts that this may not destroy Tesla's stock. To take note of, the firm expressed that an auction had set out purchasing freedom for Tesla stock, and they likewise encouraged their clients to purchase shares in the midst of a critical pullback. Is this an extended time of chances for Tesla and its financial backers? We should figure it out yet. Before we do, on the off chance that you like this kind of happy, remember to like and buy in and turn on warnings to push state-of-the-art on everything along on with Tesla shares as of late charged higher, broadening its bob off an over 2-year low. This was after Morgan Stanley made its new notes on its organization's auction, a shop on it, that which the firm accepts has set out an alluring freedom to put resources into the EV cosmetics. Morgan Stanley declares Adam Jonas said he trusts the auction was finished because of progressively negative stockpile versus request elements in the EV market, and it was demolished by specialized factors in late scratch pad. And Stanley emphasized his past position that 2023 is probably going to be a reset year for the EV market and supply is supposed to surpass request. They compose we accept 22 to 23, which is turning out to be a reset year for the EV market, where the most recent 2 years of interest surpassing stockpile will be considerably rearranged to supply surpassing interest. Morgan Stanley investigations see an appealing section direct in Tesla as the stock go on toward exchange lower, despite the fact that it repeated an overweight rating on Tesla stock. It had recently reduced its cost focus to $250 from its earlier $330 cost for each offer for a superior case situation, where Tesla can't get together with the normal EB requests. Later on, Morgan Stanley's Adam Jones accepts that Tesla can really flourish in the serious EV market. He said that the players who were self-supported with exhibited scale and moderately low expenses all through the store network like Tesla can be relative champs in the EV space. While talking on Tesla's stock auction as an alluring cost passage for financial backers, Jonas expressed that between a deteriorating full exorbitance and expanding rivalry, there are still obstacles to conquer. He added that his telephone actually accepts that even with this large number of tensions, Tesla will enlarge its lead in the EV race, as it uses its expense and scale benefits to additional itself away from the opposition. Morgan Stanley had recently named Tesla as one of its top picks during the current year subsequent to locating the vehicle organization's future learning experiences. In spite of Tesla's new difficulties with its stock valuation, trading company actually sees Tesla's stock as a chance for a development in its worth. Reports expressed that Morgan Stanley's Tesla pick featured the association's hopefulness about Tesla at the time. Not in the least did Morgan Stanley keep up with its cost focus for Tesla at $330 counter to moves by Goldman Sachs. The froth additionally multiplied down, expressing that while 2023 might be viewed as a difficult year for the EV market, completely it accepts that a hole will shape among Tesla and its opposition. A few Tesla EVs as of late qualify for tax reduction in the U.S., particularly the majority of its Model 3 and Model Ys. The new 7500 government tax break for electric vehicles in the U.S. were set to become effective on the 1st of January 2023, and keeping in mind that a ton of subtleties were hazy, the greatest questions were significantly the necessities of battery material provenance, as well as part fabricating. As of late, a U.S. depository reported that it is deferring the rules in regards to those prerequisites until spring, and consequently, they will not matter up to that point yet. Late reports show that Tesla vehicles might be getting this credit. The serious issue anyway might be that the qualification will just last a couple of months as per the U.S. Depository Division. This is on the grounds that restrictions on new tax breaks will not be placed into force at the same time, and that implies that the new guidelines will briefly be more liberal. permitting higher tax breaks on additional electric vehicles for the initial few months of the year. Well, it might appear that Morgan Stanley is very hopeful about Tesla. It is great to take note of the fact that the firm brought down its value focus on Tesla's stock from $250 to $330, and surprisingly, in a bull case situation far and away more terrible. The association's new bull case presently stands up 440 for each offer from the past value focus of 500 at Morgan Stanley's striking case. Tesla is supposed to remains at 80 books from the past 150. Objectively, albeit with a few investigations, I really do expect an enormous circle back for Tesla stocks this year. There are as yet various variables that might obstruct this change, and one of those is the apparent interest and creation issues in China. Tesla, as of late, suspended creation in China in the midst of rising coronavirus cases, and as per reports, Tesla was at that point making arrangements to stop a large portion of its work at Shanghai's Gigafactory somewhat recently in December. Anyway, the push approaches the timetable that was at that point arranged. Tesla's Gigafactory in Shanghai is the automaker's most significant assembling center, which produces two of its top-of-the-line vehicles, the Model 3 Model Y. Thus, this could fundamentally influence requests for some time and have Tesla wrestling with raised stock levels, and its second biggest market, which was prepared for a slump, it could especially influence nearby interest in this market, since less vehicles will presumably be bought before very long. Tesla could anyway sidestep that issue, assuming its Shanghai Gigafactory has been zeroing in on assembling vehicles for Xbox, rather than focus on utilizing the neighborhood market's request, albeit the vehicle organization gave not an obvious explanation behind the suspension. It had more than once dropped the morning shift at the production line and let laborers know that they could begin their break. It was early revealed that Tesla wanted to suspend creation at the Model Y electric hybrid at the Shanghai Gigafactory for a long while. Thus, the creation suspension might have been a piece of the automaker's arrangement creation cut of around 30 in December 2022. Anyway, generally speaking, there's still a ton to anticipate from Tesla in this new year, and a large portion of these will most likely be positive. This shouldn't imply that Tesla's stock achievement isn't for Tesla or whatever other stock. Add that few Tesla's market examination, and even Elon Musk himself, have all highlighted that the worldwide economy is in for an exceptionally tricky circumstance as of now, particularly in the U.S., as the Fed keeps on pushing loan fees higher to fight climbing expansion, while simultaneously supply deficiencies might be deteriorating as pressures between the U.S. and China keep on building, prompting various tech providers like Tesla to confront difficulties in delivering fundamental parts. Yet seeing Tesla's funds and the organization's future financial backers can find out about the circumstances and chance of the stock. Tesla's as of now got strong essentials, going from high profit and productivity to low measures of obligation in comparison with contenders, as well as non-stop development and interest for every one of its items. And taking into account the future creation contributions from Tesla, all the more uplifting news might be anticipating Tesla's financial backers. Another chance for Tesla to turn into a disruptor inside the car business is with its semi-truck, which has proactively begun to convey similarly the expected Cybertron is at last working out as expected and might be stirring things up around town at any point in the near future. For example, these are possible promoters for Tesla stock and are likewise expected to support deals fundamentally higher over the course of the following couple of years. However, what do you think about Morgan Stanley's cost cycle for Tesla? Let us know down below, and remember to let us know what your assessment of Tesla stock is. If you have any desire to know more about what Tesla's been doing throughout recent days, feel free to tap on this next video on your screen.